So who's feeling good about real estate now? Well, let's find out. It looks like a lot of buyers are. I'm Justin Miller with the Chong Miller Group, and this is the real estate market update for the Las Vegas Valley for resale single family homes for April of 2023. In these market updates, I give you data about what's actually happening in the market. This is not about depression. This is not about being overly optimistic and Pollyannish. This is actually what's going on in the market. Now, I do make my predictions, my longer range forecasts in November or December of each year. And I do comment about how the data indicate the market is evolving over time as we go through the video. So I've been commenting since my market forecast was issued for 2023 about how things were going to evolve, according to my belief, here in the market for single family houses in the Las Vegas Valley. And so far, I've been right on, with the exception that things are evolving slightly more quickly than I had anticipated. So we're probably about 4 weeks ahead of where I had been predicting that we would be in this market. Now, many people have been commenting, I'm overly optimistic. The market is actually really weak. We've got all sorts of problems going on and taking place. Well, let's find out just how correct I've been and how wrong these other people, these prognosticators and commentariat members who've been trying to discourage you and scare you into watching their channels. Now, what's their motivation? I don't know, maybe it's misery loves company. Maybe they just want to front run you so that they get better deals before you hop into the market if you're listening to them. I'm giving you the actual data. You can make up your mind about what that means. I give you my insights about what I believe it means. And so far, my insights for the past 4 years that I've been doing these videos have been pretty accurate. You pick and choose who you want to listen to. Okay, so as I said, April update, that means we're looking at the March data. It is, as I record this, April 7th. I try to always pull the data from the multiple listing service and other sources as close to the 7th as possible, because in the first several days of the month, we have new data which is entering, closing out the prior month, and so the data set is unstable. There's actually some revisions that will take place to the data all the way through the end of this month for last month. In fact, there's annual revisions that take place as well. So jumping on the data too early gives us something that's not very stable, and we're making comparisons that don't necessarily carry a lot of significance. By the 7th, the data is usually pretty stable. And so that's when, because I wanted to get this out in a timely manner, that's when I give these market updates. So what did happen in March of 2023? Single family resale residential price increased. So a lot of people have been saying the housing market's going to collapse. The housing market's very weak. The prices are going down. They're going to continue to go down. People have been saying, don't buy yet. Maybe you'll get some better deal at some later point in time. I've been warning you not to believe that. Well, prices went up. And we're actually up pretty substantially because we've been up a couple months so far in 2023. So prices rose to $420,000. That is up from the $415,000 that we saw in February of 2023. That's up 1.2%. This is actually the highest number we've had since November of 2022. Now, you remember, prices had gone up in the first half of 2022, and we hit a peak in May of 2022. For prices, we actually saw other numbers turning in April of 2022, and I'll make comparisons to those as we go through the rest of this video. But so it's important to know we'd hit that peak in May, we'd come down through January, and we've been up now for 2 months. We are up like I said, $5,000 or 1.2% from where we were in February through the end of March. Now, we are down year over year because that front half of 2022, we saw continued escalation in prices. And so we were at $460,000 in March of 2022. Now, that's interesting. So we're actually down 8.7% from where we were 1 year ago at the end of March of last year. So that's a significant drop, but we're going up. Now, we're going to have hard year-over-year comparisons on price through the end of May. And I've commented on that multiple times just so you are aware. Now, it's interesting because what it means is we've got divergent numbers here on price. There's two ways to look at what's actually going on, and you need to be aware of both. One, because you want to know what's actually happening this year. That's the trend that we need to be following. But two, you need to be aware of how other people may manipulate the information to scare you. Some people might tell you, we're down, prices are down, they're down 8.7%. Or whatever, some kind of similar number, because they're not using accurate data anyhow, because they're not excluding things from the data set that should actually be excluded. But they're going to tell you, oh, we're down almost 10% year over year. Okay, interesting. But we had a run up at the middle point of last year that makes that kind of insignificant, right? Nothing has changed over the last couple of months in the market with regard to difficulty of purchase, with regard to interest rates. So the steady state background environment is really different this year than it was as we were going from March through the end of 2022, when the Fed was dramatically increasing interest rates. We don't have a dramatic increase in interest rate background right now. And so looking at that point in time, not particularly relevant. There are other people who will scare you with, we had peaked at $480,000 and we're down 12.5% from $480,000. We're only at $420 right now. Well, actually, if you go back to November of 2021, that's when we crested over the number we're at right now. So that's a year and a half ago, right? So some of the time of that year and a half, we've been below where we are right now. Some of the time of that year and a half, we've been above where we are right now. But those were historic highs that we were hitting in every month of 2021 and the first 5 months of 2022. So yes, we did come off of that. And I've been very clear in talking about we've come off of that. Now there's something with regard to affordability that I want to talk about with regard to that issue. And I'm going to include it here. I usually put it closer to the end of the video, but it's interesting. It's specifically about price and how people may analyze pricing. So as you've seen in my prior videos, we had hit a cyclical high on price in June of 2006 in the Las Vegas Valley. That number on an inflation adjusted basis, making it current dollars, was $448,800. But there was a particular interest rate that applied at that time. And if we look at what that was in June of 2006, that meant that carrying costs on the median house at the average interest rate, assuming a 90% loan to value loan at a 30-year fixed rate, was $2,595 in current year dollars. That $2,595 is interesting, right? When we hit the cycle high on pricing in the current cycle, we hit $480,000. So that was up $31,200 from what we had hit in the prior cycle high, but the interest rates were lower. So we were at $480,000 in May of 2022 with an average interest rate, and the average interest rate at that particular month was 5.33%. And that meant the carrying costs on the same structure, median home, average interest rate, 90% loan to value, 30-year fixed rate mortgage, was $2,391. Now that's down. It's down from what we'd seen in 2006. I don't believe 2006 is a magical number that we're never going to get above that. But it does mean on an inflation adjusted basis that we were $204 less per month on carry cost than we had been in June of 2006. So it's kind of interesting. We actually did not become as unaffordable as we were in 2006. Now, prices have been coming down since we hit that peak in May of 2022. And we now know that in March of 2023, we were at $420,000. Now, that's interesting because that came down $60,000. That's a significant hit. That's a 12.5% decrease in the price of the median home. But interest rates went up. Interest rates were at the end of March 6.4% for a 30-year fixed rate loan. So if we took the median sale price or median property and we obtained a 90% loan to value 30-year fixed rate mortgage at the average interest rate, March 2023, our carry cost would have been $2,343 per month. Now, that's interesting because with that $60,000 price drop, we would have been paying only $48 less per month on the carry cost for that home. The prior month, actually in February, we would have been paying $18 more than we would have been paying in May. So we're sitting right around that same carry cost level now that we were in May of last year, even though prices have come down. And what that suggests to me is people have an amount that they're wanting to pay on a monthly basis. And so the overall price of a property is adjusting up or down a little bit based on that, the monthly carry cost. And so if we see interest rates come down, and there's reason to think that we may, if we see interest rates come down, that means prices will go higher. And of course, as people become more accustomed to paying both higher interest rates because they've been existing in the environment for a while now, as well as more for a house, we're going to see prices continue to go up. And we'll see that through the end of this year, assuming Congress passes the increase to the debt limit. If Congress does not pass that, then see the video that I did on challenges to the 2023 market forecast. In other words, affordability now, about what it had been last year, not really changing, despite changes in the actual dollar listing amount and sold amount for houses in the Las Vegas Valley. Now, you've also heard me say, if you've listened to multiple of my videos, affordability is an illusory concept. It's a made-up concept. It is something that's interesting from the perspective of making long-term comparisons. It's something that's also interesting in that it recognizes not everyone can afford to buy a house. And that's definitely true. It's a different conversation. We actually were at a conference in Idaho a few weeks ago about housing investment, and specifically about how to increase affordable housing within particular environments. Definitely an interesting concept, something that could potentially increase the availability of homes to people in lower income categories. But again, that's a different issue. Now, there's one other pricing issue that I have talked about over the past year and a half, 2 years, and that is price per foot. And I look at this as a comparison between price per foot and median sale price, because it gives us some insight as to the internals of the market, how the market itself may be fluctuating. So median price per foot for the single family houses that sold in the Las Vegas Valley in March of 2023, $234. That's up 0.1% from $232 in February. It's down 6.4% from the $250 per foot that we saw in March of 2022. Now, this increase a little bit weaker than what we saw on median price. Median price up 1.2%, median price per foot up 0.1% month over month. And on a year-over-year basis, we had been down 8.7% for median sale price, and here we're down 6.4% median price per foot. What that suggests is we're actually seeing some collapsing toward the middle of the market. We're seeing a little bit of the very high-priced homes coming down. There are a lot more very high-priced homes on the market in Las Vegas than there are normally. Because there's also a bigger supply of those multi-million-dollar properties. We're seeing some pressure on those prices. We're also seeing some disappearance of the lower end of the market and some movement of all pricing more toward the median. So this is kind of interesting. Those middle-income homes, those typical homes, those are the ones that are seeing the biggest uptake in sales at this particular moment in time, and actually over the past couple of months. So kind of an interesting thing. All right, what about sold, right? So price went up. Definitely good to know that. But where we've been really constrained in this market has been any kind of transaction volume. So how did transaction volume look in March of 2023? Well, hold on to your socks. 2,151 single-family resale houses sold, closed transactions, sold in March 2023. That is up. It's up a staggering 41.9% from what we saw in February of 2023, up from 1,521. That's a really strong growth number. Now, we would expect to see growth in March. Every year we see growth in March because of seasonal issues, absent some extraneous event such as the economy being closed down. So we would expect to see, but this is a really strong growth number. In fact, we'd been plumbing transaction volumes that were at multi-decade lows over the November, December, January, even February timeframe. Yes, so we've bounced significantly off of that, but it's kind of interesting because we're actually now within about 350 transactions of what would have been normal for this month. So we're still a little below normal, but we have come way up from the terribly low, almost discouraging numbers of transactions that we've been seeing over the prior multiple months. So really, really a good sign of stability having returned to this market and what I believe is going to be future growth. I'll get into that in just a minute. Now we are down 32.7% from the 3,171 transactions, closed transactions that we saw in March of 2022. I will point out, March of 2022 was transaction-wise, sold-wise, the strongest month of the entire year of 2022. So relative to the strongest point of 2022, we're down a third, 32.7%. Significant, definitely, but again, this is where statistics start to become manipulable. Some people could say we're two-thirds of what we had been last year. The reality is we're actually within 10% of normal right now in this market. So don't let people scare you with transaction volume is way low. Transaction volume is only way low when you compare it to the highest volume month that we saw all of last year. All right. Now, why do I think things may still continue to get better? And it's not just because the economy is in a general steady state right now with employment numbers released today, employment actually continuing to improve, with inflation numbers having been released last week, showing inflation coming down, again, slightly further than what we'd seen it over the prior several months, maybe decreasing the likelihood the Fed continues to increase interest rates. The Fed also got a big scare with the failure of Silicon Valley Bank and Signature Bank, and that's likely to discourage further rate increases from the Federal Reserve. We'll find out how determined they are to look backwards at inflation numbers and just scream, or if they're going to actually start behaving reasonably. But there is good reason to think that the increasing interest rate cycle has come to an end. There may be one additional small increase, 25 basis points. I'm thinking it's actually pretty unlikely because of clear harm that the Federal Reserve's activities have been imposing on the banking system. And so we also see that mortgage interest rates may start coming down and closing the gap from the approximate 3% gap between 10-year treasuries and mortgage interest rates right now, down to the more typical 2%, 1.96% gap. And as that happens, that means mortgage interest rates, which had been at 6.4% at the end of last week, that mortgage interest rates could actually come all the way down to the mid-5s over the next several months. Again, contingent on Congress passing the increase in the debt limit. Let's hope they actually do that. All right. So in this environment, then, we look at pending home sales. So these are contracts that were written in March that are likely to close in April. Some may be displaced till May. But this is statistics about what actually did happen that are forward-looking. And it's nice to be able to get some forward-looking data. So pending home sales. Pending home sales, contracts that were signed in March of 2023, 2,214. That's up. That's up another 14.5% from the 1,933 pendings that were written in February. That's a really strong number. And it indicates further strength in buyer growth in the number of buyers that are looking in this market, number of buyers who are actually wanting to buy in this market. So that's really encouraging. Now, it is down from the pending number, again, the strongest number of all of last year. Pendings in March of 2022, it's down 29.2% from the 3,129. So that tells us very strongly that even though price in 2022 did not peak until May, we actually started seeing significant drop-off in transaction volumes associated with really strongly increasing interest rates at this time in 2022. We do not have that kind of predicate that would drive down buyer activity this year that we were seeing last year. So this is suggesting to me buyers are coming back, buyers are interested, buyers are wanting to get into contract and purchase homes. And I don't see an impediment to that continuing to move higher as we go forward in time. So really encouraging. Not only were sales up a very strong 41.9%, but pending contracts were also up another 14.5%. So that suggests that April is going to be very nice, good, strong month in 2023. And I think that trend is actually continuing. All right. What about inventory? Because if we've got buyers coming back into this market, we need to have sellers. We need to have homes for sale. And I've been commenting back with my market forecast video that I thought buyers would return to this market before sellers would. And I've been commenting over the past couple of months, we're seeing drops in inventory, and this is setting us up for a year 2023 that's going to look like the year 2020, where we saw buyers returning after the pandemic shutdown, and they were returning in front of sellers, and that was pushing prices up. It put us into a very low inventory environment that caused prices to go up all the way from the second half of 2020 all the way through 2021 and through the first half of 2022. And I think we're actually setting ourselves up for something quite similar. So inventory, or for sale houses, at the end of March of 2023, 4,386. 2,453. Now this is down. It is down 20% from the inventory that we had at the end of February, 5,438. So we're down over 900 houses in inventory. Another way to look at this is we have 2.3 months worth of inventory sitting in the market at current sales volume at the end of March. That's down from 2.8 months worth of inventory at the end of February. So we just took out half a month's worth of inventory. We just lost 2 weeks worth of inventory. And inventory, just to be clear, that's the number of houses for sale. And that month figure, the number of months, that's how long, if no new inventory came into the market, how long it would take to deplete everything that's out there and there would be 0 houses left for sale. Now, obviously, we get in new listings. We'll look at that in a second. But if that were the case, 2.3 months, well, months worth of inventory to be in a balanced market. Many people say 6 months. In Las Vegas, it's actually something between 5 and 6 months because we have a slightly faster transacting market on average here. We're half that, right, in terms of months worth of inventory, 2.3 months worth of inventory. This is a strong 6-month downtrend in the amount of inventory that's sitting in the market. Really, really consequential. And by the way, this is very unusual, actually, in the market as well. We've only got a handful of months over the prior, however long you look at the marketplace in Las Vegas. And those months have been some in 2018 and then the late 2020 through 2021 timeframe, where we saw inventory below 3 months, actually below 3 months. So this is very unusual to be in the 2 to 3 month range. And if we keep falling on inventory like this, we're going to actually fall below 2 months within the next, potentially by May. Now, we are up on inventory from the very low 3,471 that we saw in March of last year. We are up 25.4%. Normal inventory, right, on a month's basis is between 5 and 6 months, but on a number basis is about 10,000 houses, and we are at 4,353. We're actually down on inventory. Another way to look at this, from when we peaked in May of 2022, that's when we hit not just peak pricing, but we hit peak inventory. We were almost normal. We were at 9,550 houses for sale in the Las Vegas Valley. We're down 54.8% from that. We've got less than half the inventory that we had in May of last year. What's 8 months ago, 9 months ago? So inventory has been dropping really quickly. And this is something to continue to pay attention to. It's a trend that's so in place, it's going to be hard for this to turn around. And I've been commenting about this for months and saying it was likely to happen, going all the way back to my market forecast video in November of 2022. Very few other people have been calling this trend that's now very clearly established. And hopefully we actually get some more inventory in place. Now, where does inventory come from? It comes from new listings. New sellers deciding they want to list their house for sale. A little bit of helpful information with this. New listings in March of 2023, 2,393. This is up. It's up 11% from the 2,157 houses that were listed, newly listed for sale in February of 2023. It's down, though, 35% from the inventory growth that we were seeing last year. In March of 2022, we had been at 3,685 newly listed houses. that month last year, we're down 35%. We're down over a third from what came into the market in March of 2022. Now, a couple things. Every year we see seasonal patterns in the market, as you can see in this chart. New houses or newly listed houses hit a seasonal low every December. Why? Because people are at home, they're getting ready for holidays, or they're traveling. They don't want people traipsing through their homes. It's winter, which causes some people to say, you know, there's not as many buyers in the market, so I'm not going to list my home right now. Children are halfway through the school year. Parents don't necessarily like to move in the middle of the school year. And so every year, as you can see on this chart, we get a seasonal low on newly listed inventory in December's. Now, we were hit with really unusual market activity in 2022, both in the front half of the year and in the back half of the year. And so we can see that newly listed came down November of 2022 all the way through March, basically, of 2023. If you go back prior to November 2022, we had not seen newly listed resale homes for sale coming into the market, except in December's, going back 15 years. So while we had a healthy increase in newly listed of 11% from what we saw in February, we're still really low. Number of houses coming into this market to go into inventory, really low. This is not going to help us continue to build inventory. This newly listed percentage itself is already below the increase in pending home sales that we saw in March of 2023. So if that was the steady state, we'd actually just by that see inventory come down further. And we only have 2.3 months worth of inventory coming into the month of April. So that's a challenge that we've got in this market, is the supply of houses for sale continues to go lower or even maintains at this level. We're going to see upward pricing on pressure. We've seen that now. We've got prices have come up. Off the bottom, we're up an additional 1.2% in the month of March. And we've got ongoing sales activity, big increase in closes, and very significant increase in pendings, meaning contracts that were signed. This is the trend we're going to see through the remainder of 2023, again, as long as Congress passes the increase in the debt limit, because this is what we've got in the marketplace. We've got too little inventory. We've got buyers who want to buy. We have people coming into the Las Vegas Valley for new jobs, for school, whatever it is, and they need houses. And if they're wanting to buy, they don't have much choice. So they're bidding up prices. Their buyers are competing against each other. Now, we've not seen much of the multiple offer situation happening yet, a little bit, but if we go below 2 months worth of supply, we're going to see that coming back into this market. Now, you may remember that as we were in the back half of 2020, we started to see that. It was actually really unusual in the Las Vegas Valley to see multiple offers becoming common. We're not Toronto, Canada, we're not Seattle, Washington. There are some markets where multiple offers are kind of a common scenario. That's not the case here. But we went through it for 2 months of 2020. We went through it through all of 2021, the first 1 or 2 months of 2022. We could see a return to that, which would push prices up at a more rapid rate. And we do have transaction volume increasing strongly. So that's what's going on in the market. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. We help people build wealth through real estate. If you think that we could help you in your real estate adventures, please give us a call, send me an email. Whether you're an investor, whether you're looking to buy a primary home, a secondary home, a vacation home, whether you're looking to sell a property, to reposition yourself in the marketplace, let me know, because I think we can probably help you a lot. But interview us and you'll find out whether or not we're a good fit. And please smash the like button, subscribe if you've not already, and share these videos with your friends, colleagues, neighbors, family members who you think might benefit by having actually correct information about what's going on in the marketplace rather than scary stuff being said by people who are uninformed or happy stuff by people who may be uninformed. This information is really helpful and can help anybody position themselves better in this marketplace, whether you're a buyer or a seller. Thank you.